purpose of having a retirement account is for your future, not for now. So you're actually doing this entire process for the next 10 years, 20 years, 30 years of your life.
You can take out a personal loan from a self-directed 401k. If you did need, personal cash to use, there is that option as well. But you can make it whatever. That's the beauty of a self-directed 401k. You're setting the interest rate on what you're paying yourself back. So remember, even if you set the interest rate at 8%, you're paying yourself, into your future.
Welcome everyone to another edition of Ask the Multifamily Expert. And with me today, I have Audrey. I'm super excited to have you, Audrey, because this is one of the topics that I am not vast on. I only have surface knowledge about it. But when it comes to my investors asking me a lot of questions, I always defer to the professionals. And I'm happy today that we are here to explain to our viewers and any other person that's going to see this video afterwards how they can maximize their IRA. But before I introduce you, I would like to give everyone a background why it is important for you to start making use of your IRA or your 401ks for multifamily investment. Multifamily investment goes with inflation, but the IRA and the 401k, they don't have any inflation adjustment. So if inflation is going up, that is how much you're losing on your 401k or your IRA. So it's important that you understand that you have other options like multifamily for you to redirect those funds and have them working for you, and you start generating wealth with it. So this is why this is important. I have many investors that are currently using their IRAs or their 401ks to do investment. And I can tell you for a fact that it is a better decision. As long as you have the right sponsors or you have the right team to help you mitigate the entire process, then you are on the right track in attaining financial freedom. If you've not been following us on our Facebook, on our YouTube, I think you're missing out on a lot of content because we have quite a lot of things that we've addressed. Everything about the ABC of multifamily, we've addressed the entire process in our YouTube channel. If you're not subscribed to it, the address is Blue Ocean Multifamily Group on YouTube, or we have it on our Facebook as Blue Ocean Multifamily Group. Yes, we have it on the screen right now. I'll just give it a minute. This is where you have all the content on multifamily. Okay, thank you so much. So now I would like to introduce Audrey. Audrey, typically I don't like to introduce the guests because most times I don't do justice. So I always give the guests the opportunity to introduce themselves so that we don't miss out on any vital details. So now, who is Audrey Planz?
Thank you so much, Phoebe, for having me, and I'm excited to be here to share. Again, my name is Audrey Planz. I work for EQRP Company. It stands for Enhanced Qualified Retirement Plan. I joined the company early last year, and I was actually on the member services side of things, so working directly with a lot of our members on rolling funds into their self-directed retirement accounts, and have now switched over to the partnership team on the sales side of things. So looking for members to be ambassadors and reaching out to fund managers like Bibi. This is how I got connected with her, to help fund managers raise more capital for their deals by simply educating people around self-directed retirement accounts. So very excited to be here. And Bibi, thank you again.
Thank you so much. So let's dive deep into what we're here for today. I would like to start with this question. What is the difference between the traditional IRA and the self-directed IRA? Why should people transfer their IRA from traditional to self-directed IRA?
So with the traditional IRA, you are limited to the stock market. You're limited to Wall Street. And so with self-directing, you then are able to take your retirement funds and not be limited to just one asset class, being Wall Street. You are open to alternative assets, that being real estate, like the offerings you have, precious metals, cryptocurrency, if you like that route. You could do private lending. So there's just a lot more opportunities to diversify your portfolio within self-directed retirement accounts.
Okay, again, how can somebody set it up? Because most times our investors, some of them take more than 45 days to do that setup, and it's a long process, and sometimes they miss the deadline. How is your process different from those other companies that are offering the same services such as yours?
So when rolling over, and depending on what type of retirement account you're rolling into your self-directed retirement account, that process could take longer. That is simply on the prior custodian and how quickly we're able to get them to sign off on things. But if you're rolling over a 401k into a new self-directed retirement account, that takes up to a week. And from there, with a self-directed retirement account, you as the individual, you have full checkbook control. So you're the one making those transactions. You don't have to wait on the custodian to sign off on where you want to send your money. So again, that takes out a lot of time because, you can reach out to a custodian and they may take longer than what it would be for you to log on to your own account, see the money, send it to an offering like yours, BB. So there's just a lot more flexibility with self-directed accounts.
Okay, so I don't need a custodian when I'm working with you guys. I just do it myself. You guys will help the person take that funds from the traditional IRA to me, and I decide on the investment I want to do. Is that correct?
That's correct. Mm-hmm.
Oh, is there any limit to the type of investment I should do or any type of investment at that point?
So at that point, the only thing you're limited to, you can't invest with retirement funds. The IRS says that you cannot invest in like collectibles. So, think of any, antique rugs or something like that. You could not invest in that. But as far as like real estate deals, you can invest in anything. The limitations come to play with the person, or you cannot self-direct or you cannot benefit yourself in investing. So there are disqualified persons. So you couldn't go and invest your funds into a home that you're then going to own and live in. So the IRS sees that as a disqualified transaction. Also, you have to make sure that you are remaining passive and you are not investing in, again, a deal that you're running or owning or a GP of. So you're not limited to the type of real estate deal. It's just within those deals, you have to make sure you're remaining passive.
Yes, I remember because some of our GP teams, they have IRAs that they could have tapped into do the investment, but because they are GP members, they cannot use that IRA. So yes, I agree with you. And it's true. Is it because of conflict of interest? Why is that? Or is just a tax guideline?
Yeah, it's just simply written within the tax code. The IRS does not allow you to use retirement funds to directly benefit yourself. And that includes your vertical lineage. So you couldn't go and invest with your father or your children, anyone within your vertical lineage. That is also a disqualified person within a retirement account.
Okay, I have a very different question now relating to tax. I don't know if you'll be able to help. If I'm using my self-directed IRA, how does the taxing in that perspective happen? Is it taxed? Is it free of tax? I don't know if you can answer that, but if you can, I'll be happy to understand. Yeah.
Sure. So I am by no means a tax professional, and we do opt to CPAs to help our members, but I can say you are in a tax deferred retirement account. And there are tax implications in some investments. I would want to point out, though, and I know I mentioned this with you before, BB, when you are investing in real estate with a self-directed 401k, there is a UDFI exemption, unrelated debt financed income exemption, which means you are not subject to UBIT tax. That is one we like to point out because, again, you can be in a self-directed IRA or a self-directed 401k. A lot of our members love to invest in real estate, and so they choose to go into a self-directed 401k for that reason. Within an IRA, you will be subject to UBIT taxes where there's debt financed.
Invariably, what you're saying is that there are two 401k and IRAs self-directed operates differently.
Yes.
Right?
Mm-hmm.
Oh, okay. Is there any reason why that is? So 401k is not taxed, self-directed IRA is taxed. Is that what you're saying? Please explain.
Sure, because we're talking about real estate. And so I just want to point in on that because there are tax implications for an IRA and a 401k. Again, just looking at if you are taking retirement funds and you are investing in a real estate opportunity that is debt financed, within an IRA, you will be subject to UBIT tax. But within a 401k, you have the UDFI exemption, and therefore you are not subject to pay UBIT tax. But anything beyond that, I mean, obviously, if you take out distributions, there are tax implications, early withdrawals, all of that. But again, we always opt to CPAs because we are not tax professionals, nor are we financial advisors.
Exactly. So that's why I'm just trying to pick your brain. I know you're not, but you should. I know you have an idea. Okay, I've seen cases whereby we've given. Oh, somebody is asking a question. Someone said, in my W-2 job, my employee does not allow about this? Is there any way around it besides leaving my job?
So we do have people who are W-2s who have a self-directed account. However, if you're with that job, with that specific retirement account that you have with your W-2 job, sometimes they let you do an in-service rollover, but most of the time, a W-2 job, they would not allow you to take those funds and roll them into a self-directed 401k account. You would have to leave the job and wait at least 2 pay periods to then roll it into a self-directed one.
Wow. Okay. So there are no other options at this point.
No, not for that money with that current W-2 job. That employer, it's all on the way that they set up their plan. You would have to call and see if there's an in-service rollover. But yeah, most of the time, unfortunately, those funds are stuck there.
Okay. Somebody is asking, Rosa Johnson, she said, what are the best passive strategies for using self-directed IRA funds, PML dues?
Again, I'm not a financial advisor or tax professional by any means. I can just speak to, we have a lot of our members who do private money lending and receive great returns on that simply because it's, private. And so
let me throw more light on this. Investing with your IRA funds, one of the benefits or passive strategies for doing that, one of the best benefit for you to do that is one, like I said earlier, multifamily goes with inflation. So when you are investing in multifamily, if there is inflation, like what we are currently saying, that money will be growing as the inflation is growing. So for example, let me put in the right perspective. For tenants, you see that tenants will start paying high rent, things to start, we can increase our rent at that time. So inflation and multifamily, they just go hand in hand. It works well with that. But for your IRA and your 401ks, when there is inflation, it eats into that money that you've put in. So for example, if you've invested, let's say $100,000 and you have an inflation of 9%, which we had last year, and let's say what they're promising you for your IRA, your annual interest is 4% or 4.5. Look at the difference. You're already losing. In short, you're in a negative because inflation is at 9% and you are at 4.5%. So you're not making profit, rather you're losing and all that. So I don't know, Rosa, if I was able to answer your question, but if not, you can ask again, then we'll address it. Yeah, so there's somebody, Amaka wants to ask you a direct question. So Amaka, you can go ahead and ask your question.
Hi.
Hi.
Thank you. I was trying to type, but the chat said disabled, so I wasn't able to chat or something.
Oh, sorry.
It's okay. My question is, I have 401k from a previous employer, right? Do I have to roll it over to a self-directed IRA before I can invest it, or I can just take it from there, from the 401k and invest to multifamily? How does that work?
Okay, let me explain what she said, or did you get it? She said she has a 401k from a previous employee, and can she just invest directly like that, or she needs to roll it over as a self-directed 401k before she can use it to invest?
Yes, you would have to roll it into a self-directed retirement account in order to invest in alternative assets.
Okay,
Can you walk her through the process with you guys? What would she need to do if she wants to roll over?
Sure. And that is a non-taxable event. So keep in mind that doesn't incur any taxes. So what we would do with a 401k, that's a simple and easy phone call that we would make with you and the custodian of that retirement plan. And we would simply have a phone call and get a check issued. Typically, they'll have the check come to your home address, and then you would simply forward it on in the mail to the bank that we partner with where your actual 401k account is held. And you would then deposit into that checking account and have full checkbook control to then wire it out to any alternative asset that you wanted to choose from.
How long is the process usually takes?
With the 401k rollover, that typically only takes a week, and it only takes like 2 to 3 days for us to set up the plan for you.
Okay, thank you.
Ms. Amaka, I would advise that you link up with her and talk through the process and see if it's a good fit for you. We'll be displaying how you can contact their company after the event and all that. Thank you so much, Ms. Amaka. So guys, let's keep the questions coming in. I'm enjoying it. One other question I would need to ask you, I know you said you're not a tax professional, but how is K1s treated when I have my self-directed IRA? Because the taxes are deferred, correct? if they are deferred, will I be able to take advantage of the K1s that are given to me to write off my tax liability? How does that work?
Yeah, I personally am not able to answer that. I could talk with my team surrounding that. But again, we always opt to working with a CPA on the tax strategies to, help benefit in that way.
Okay, because what we heard is that they're already taking advantage of deferring their taxes. They might not be able to take advantage of the K1s at that point. But what we normally tell them is at the end of the cycle, like when we are selling and all that, they'll be given a large chunk of money. They might be able to use it at that point to write off their taxes. But guys, I'm not a CPA. I'm not an accountant. I'm nothing like that. If you need more information, you can talk to your CPA personnel to answer those questions. Okay, so let's go right in again. What are the potential risks of investing in real estate using your self-directed IRA?
So the same as it is with personal funds, there's always risk. You could potentially lose some or all of your money. So it's really the same as within personally investing with a self-directed IRA.
Since I'm in charge or in control of my money, and let's say I misuse it, what's the implication of that? Because, some people, rather than them using it to do some form of investment, they can start using it to do some personal stuff. Is there any implication for that?
I mean, yes, there's obviously implications with the IRS, and that would be, again, working with us specifically, we don't have optics on what you are doing. We simply educate and tell you what you can and cannot invest in.
Okay.
But it's on you as the plan administrator and trustee of your self-directed account to follow along with the IRS guidelines.
So invariably, you're in control of your life at that point. And that is the aspect I wanted to throw a spotlight on. Investing in IRA and 401k, as many of you that are doing it, there's no problem. You don't have any issues, but I will say this and leave it at that. When you are putting money into those products, there are people using your money to do other things. One, you do not have any control of what they use your money to do. You do not have control of how much profit that they make or they did not make and all that. They can declare they're giving you 4.5% and maybe they made 10% and all that. You relatively don't have any control. But investing in multifamily, you have a control because you can decide this is the deal I want to versus a 401k or IRA. You can't decide this is the deal you want to invest in. No, you can't. They do that decision for you. But for multifamily, you choose the people you want to work with. I like their deal. I like the returns. This is where I want to put my money. So you are in total control of your life at that point. Looking at you having control of directing those funds, it just helps you just grow your grow your income at that point. I think we have one more question before we call it a day, except we have anyone that wants to ask any question. How can a self-directed IRA generate consistent cash flow through multifamily investment? I kind of have the answer to this, but let me defer to you first.
Yeah, no, I would say, again, you are diversifying your portfolio. You're not limited to the stock market, which, you look at the last 20 years, the average IRR on the S&P 500, roughly 10%. With an offering like yours, BB, I don't know specifically what the IRR is, but I would assume that it's higher than, what you would typically get from, limiting yourself to the stock market. So again, you have to remember that you're using retirement money. So obviously the returns you're receiving from these deals, it's not cash on hand that you can go then and spend, right? It has to stay within the retirement plan. But again, you are building your future by investing in alternative assets like real estate within your self-directed 401k or IRA.
You are correct about that. You can use your self-directed IRA, like I said in the previous statement I made, to invest in a deal that suits purpose. So for example, you say, okay, at the end of my working years, I want to retire. I want to have about 10 million in my account to retire with. At this point, since you already know the goal of what you want, 10 million, you can decide, okay, this is how I intend to generate it. So I'm going to start investing in deals that are going to give me so amount of returns, let's say 8%, 7% on my investment, and keep compounding them. What that means is that I enter a deal, let's say with $100,000, I invest that money into that deal. And every year they're giving me about 8% of the returns as preferred returns. They're giving me that every year. I'm taking that 8% of my 100,000, and when they sell, I'm making double of it. I'm getting getting an additional 100,000. So that extra 100,000 I've gotten plus my initial capital of 100,000 that I must have invested, I can take both 200,000 at this point. This is excluding your preferred returns or your cash flow. Those ones are Maybox money that you can use to pay your mortgage or do any other thing. But now for the sales, let's say at the time they are selling and they give you double of that money, you can decide to take that 200,000 and put into maybe 2 other investments and keep compounding it. And before you know it, in the next 5 years, that money has doubled. What is double? It has 10 times its value because you've compounded interest on it. And that is just with 100,000. So that's why I tell people achieving financial freedom with multifamily, once you understand it, it's very, very easy for you to get that freedom just with a little amount of money. There's another question here from someone. If I invest from self-directed IRA, is the return sent to me or goes back to my IRA account?
Yep, it will go straight back into your retirement account.
Everything, the cash flow, the sales, everything goes into that account. Okay,
yes,
so what
correct.
if I decide I want to take part of it because maybe the deal was so good, I made so much. What happens? What do I do? It will be taxed?
So again, you're in a tax deferred account. So eventually, yes, you will be paying taxes when when you take out those distributions at retirement age, but you're in a tax deferred retirement account.
Okay, so once we give out cash flows and we pay out, maybe we refinance, we give them money and all that, everything goes back to the IRA account, and they can as well go back to the IRA account and take that same money and reinvest it into another deal and double it.
Yes.
Correct. Yeah. So
correct.
Yeah, so that's the benefit. I think the only downside to that is I don't have the money to spend personally for myself for personal things. It just goes back to the IRA. But the purpose of having a retirement account is for your future, not for now. So you're actually doing this entire process for the next 10 years, 20 years, 30 years of your life. So it's not for a short time, okay, I'm making this money, let me start dipping my hand into it. Is that you are already saving up for your future. So this entire process is outlined to follow that process so that we don't eat our future now instead of when it's needed, So yeah, so that is why this happens. So is there any other question from any other person? I like the fact that the audience is very engaged today.
If you don't mind, I'd like to point out something with self-directed. So I did want to point out that you can take out a personal loan from a self-directed 401k. If you did need, personal cash to use, there is that option as well.
Is there going to be interest on it? So, okay, let's say someone like Mr. Maka use a 401k to invest and we give her a distribution. It goes back to IRA. So the other alternative for her to use it is to take a loan from it. Does it come with any interest?
So within a self-directed 401k, when you take out a personal loan, we recommend that you keep it at prime interest rate. I believe it's 7.75% right now, but you can make it whatever. That's the beauty of a self-directed 401k. You're setting the interest rate on what you're paying yourself back. So remember, even if you set the interest rate at 8%, you're paying yourself, into your future. So, but
so it is okay, let me get it right. Sorry for chiming. So you're saying that whatever interest I set my interest rate, is that what you're saying? And that interest rate I'm paying is going back to me, not to anybody.
It's going to your
my
retirement account. Yes. Yep.
Oh, okay. So I am taking for myself and paying interest for myself. That's a good one,
Yes. Yeah.
Oh, okay. That's a good one. I think investors should take advantage of that. If you need to use your IRA to do personal stuff, take a loan for yourself, set your interest rate, and pay yourself back in the future. And multifamily will help you pay back because you always get consistent cash flow for a good deal, not for all deals, for a good deal. We've seen deals not doing well in the last 2 years. So you also need to be very careful because this is your life as well. You need to be sure of who the who the sponsors are, the deal itself, their track record. These are things you need to consider because don't forget, this is your hard-earned money and you need to be sure that you're not losing it. But overall, multifamily is just the right way for you to go with your IRA. So Andre, what's the last word you want to tell the audience? Is there any last word from you? Then afterwards, I'll ask you how they can reach you after now to set up their self-directed 401k or IRA?
Sure. I would just say, again, don't limit yourself to just one asset class being the stock market. Remember that you can still invest in the stock market within a self-directed plan. You are just opening yourself up to more opportunities. So again, diversifying your portfolio to give you a better opportunity to compound what you would, as opposed to just staying in that limited asset class of the stock market.
I would like to put a spotlight on what you said. So self-directed IRA will open you up to using your funds to do so many things, to invest in so many assets. So you can invest in the stock with it. You can invest in real estate. You can invest in oil and gas. You can invest, can you invest in Bitcoins? I think they can invest in, I don't know.
Yes,
so you can invest in Bitcoin. So you can use that IRA, because if it's in the traditional way, you cannot. Whoever has your IRA is the person that will be taking such decisions, and you don't even know what they will be investing that on. But with a self-directed IRA, you take charge of your life. And that is the purpose of what we are talking about today. And we've always been talking about taking control of your life, because it's your life. Nobody else is going to benefit more from taking the right decision and all that. So Andre, thank you so much for having you. How can people reach you?
Yeah, again, you can scan that QR code to get in touch with us. You can also email me if you'd like. It's audrey@eqrp.com.
Okay, I'm going to leave it here for a while so that people can take a picture of it, or take your email and all that. I will encourage everyone, as many of you that have IRAs and 401ks, please take advantage of self-managing it yourself. The last 2 years have not been good for 401ks. I don't know how many of us have been listening to the news, how inflation has eaten deep into most of these investments and all that, because they work with the stock market most times, and you have no control. The most difficult part I cannot even fathom is, this is my money and I have no control of what I can do with it. I think that is the breaking point for me on any of my investments and all that. So I would like you to reach out to Andre and take control of your life and all that. Andre, it was nice meeting you. I learned a lot today, and now I think I can boldly speak on some things now about IRA and 401k. I can really talk about it because you made us understand some things and all that. Thank you so much for taking out time to be here. And the audience, you guys were very amazing today. You engaged so much, and I really, really appreciate it. And have a wonderful day.